Hello and welcome to Views on News. I am Jawad Tehami. Pakistan's economy had been faced with immense difficulties and challenges, but the measures and the efforts by the authorities here in Pakistan, the government and the concerned departments had been continuous and focused. Getting a standby arrangement with the IMF to avoid default and implementing the tough conditions under this particular agreement help the economy to take a better shape. Also, gigantic programs, including the SIFC, the Special Investment Facilitation Council, in order to attract the foreign direct investment. Also, revitalization of China-Pakistan Economic Corridor and Green Pakistan Initiative in order to increase the agricultural productivity and enhance the exports were launched during this particular year. Also, measures to curb the currency hoarding and smuggling and crack down against power pilferage also yielded positive results. When we take a look at the economic indicators during the first 5 months of the current fiscal year, they suggest, owing to these efforts by the authorities here in Pakistan, the economy is back in the right direction. Earlier we saw that Federal Board of Revenue had, from July to October, had exceeded its collection target by 66 billion rupees. Also, the continuous depreciation of Pakistani rupees value against the greenback was also turned around. Pakistan Stock Exchange also saw the psychological barrier broken and reaching record points. Now, the Finance Ministry's Economic Update and Outlook for December 2023 says, let me quote, the sustained rise in PSX index over past 5 months indicates an improvement in the overall health of economy and signals a positive economic outlook for the ongoing fiscal year. Unquote. Now, this particular document, which has been released by the Finance Ministry regarding agriculture sector, says that the prospects of achieving production targets remain positive. Regarding the external sector indicators, it says these show a strong recovery during July to November fiscal year 24. Year-on-year exports have increased by 21.5% in November 23, whereas imports have increased by 2.9%. Exports to regional countries, including Kingdom of Saudi Arabia, the United Arab Emirates, as well as Kuwait, have also bounced back. Regarding the fiscal side, the document says that this highlights the successful implementation of the consolidation measures in the first 4 months of fiscal year 24, leading to a significant rise in total revenue receipts that outpaced the growth in expenditures. Regarding the foreign direct investment, there was an increase of 8.1%. Also, the Finance Ministry says that inflation may ease to 24 to 25% in January 2024. There has also been an observation which has been made by the World Bank country director as to what reforms and where those reforms are actually required in order to further strengthen Pakistan's economy. We'll also be taking that one up for discussion, all these aspects. For that, we are honored to have been joined by an esteemed panel of guests in the studio, Dr. Khalid, Waleed, Economist. Dr. Waleed, thank you very much for your time for being with us on the show tonight. We really appreciate that. On Skype at the same time, we are honored to have been joined by Dr. Khaqan Najeeb, former advisor at the Ministry of Finance. Dr. Najeeb, thank you very much for your time, also for being with us on the show tonight. Really appreciate that. On the phone line, we are honored to have been joined by Dr. Vaqar Ahmed, happens to be an economist. Dr. Ahmed, thank you very much for your time, also for being with us on the show tonight. Really appreciate that. Dr. Waleed, if you allow me, let me begin the discussion with Dr. Vaqar Ahmed. Dr. Vaqar, as per your understanding, after the tough measures, especially after the country avoided the default, taking the standby arrangement with the IMF, how do you think the performance had been? The government and the authorities had to take really some tough measures, but those tough measures have resulted into some positive outcomes as far as the economic indicators are concerned. Your take regarding that, sir?
Thank you very much for having me. And I think, as your report indicated, there has been, of course, a sense of macroeconomic stability under the program. Of course, full marks to the caretaker government for taking some very tough measures, which, of course, any political government may have found very difficult to take, of course. Most notably, I think in a couple of areas, for example, taxation, energy, subsidies, for example, all these three areas were really contentious for any political government, and they used to take awfully a lot of time to finalize the things. I think given that caretaker government had a limited horizon, and of course, they did not have the kind of liberty which a political government would have to think and going, of course, again and again for parleys with the IMF. They certainly took those difficult measures in both power sector, gas sectors, including, of course, increasing the fiscal effort, which is shown in FBR's numbers. So all in all, I think in terms of clearing the staff level talk, I think they managed to put a very good performance. Now, having said this, of course, there's been a lot of demand destruction in the economy, and the slowdown of demand has started to impact a lot of sectors. So despite of a decent agriculture sector outlook, the outlook in large-scale manufacturing isn't looking very promising. And that is an area which probably the incoming government will really have to tackle, given that there's lack of demand, dynamism, investors who would have liked to come into medium to longer term contracts are shying away at the moment. So that's an area where we'll need to work in the coming future.
Right, Dr. Ahmed, as far as the Pakistan Stock Exchange is concerned, now by looking at this particular report, if you allow me to quote, that in November 2023, the Pakistan Stock Exchange showcased outstanding performance. The sustained rise in the PSX index over the past 5 months indicates an improvement in the overall health of economy and signals a positive economic outlook for the ongoing fiscal year. Now, regarding the performance of the Pakistan Stock Exchange, we saw a continuous bullish trend in the past couple of weeks. Then there was a little bit of nosedive for a couple of days. Now we have seen it has bounced back from the last 2 consecutive days. Do you think the correction which was actually required has been done, and now it is back again towards the upward trajectory? And what does that rise in Pakistan Stock Exchange indicate about the overall state and health of economy as per your understanding?
Yes. So stock market essentially is a market for secondary instruments. So it cannot be directly correlated with the health of the economy. But I think, yes, the report correctly notes that given that there was some certainty, political certainty when the election date was announced, that created some momentum for, of course, the markets to at least think about a medium term, that there will be elections taking place, there will be a new government coming, there will be longer term policies which the new government will be coming. So that certainty, adding with what we were suggesting earlier, alignment with the IMF, stability of rupee, for example, all of this, of course, contributed to dynamism at the PSX. Now, the correction is always important, because if there's no correction, you are bound to have bubbles which could create much more losses you would like them to do, And I think the only reason that people panicked in the middle of the rally was because PSX had actually rallied after more than 5 to 7 years they did. So people really panicked because they knew that, or they at least had this expectation that if this rally stops, the next sort of round of dynamism may take another 5 years, which is, of course, a wrong expectation. But that's what an average investor thought, But correction is always good, and one shouldn't, of course, see this as for example, what many had termed that this may be a very short-lived dynamism. I think it only points out that there's good regulatory oversight and market living the way it should.
Right. Regarding inflation, what's your understanding? Now, this particular document also says that inflation is likely to reduce to 24 to 25%, especially when we talk about the month of January in the coming new year. What's your understanding of that? And there are certain factors which have also been highlighted by the Finance Ministry that include the stable exchange rate, contained aggregate demand, better supply position, moderation in the international commodity prices and favorable base effect. Do you think if these factors continue to show the similar sort of a trend, the inflation in the country is likely to reduce considerably after January 2024 passes?
Yeah, I think inflation, of course, would have been tamed earlier as well, but certainly the energy prices and most notably the gas prices, of course, didn't allow the inflation to come down, and of course, interest rates were high as well. But one of the things I think which has happened is in case of, for example, food price inflation, you can readily see that the positive impact of crackdown which was done in the commodities market against hoarding, that of course worked. So, and it sends the signal that any sort of speculation that was adding to inflation will not be tolerated. So one message is that this kind of market regulation must remain intact. Second, of course, energy prices. Once, of course, they are further increased, the lifeline consumers should be insulated. And thirdly, I think in case of course, energy prices, we are seeing that globally these may decrease for the next quarter or two. Those prices, those reduced prices, the global prices that are passed on to the consumers, they could taper inflation.
Right, Dr. Vaqar Ahmed, Economist, joining us on the phone line. Thank you very much for taking time out for Views on News tonight. Really appreciate that. Dr. Waleed, now this performance of the Pakistan Stock Exchange, continuous bullish trend over the past couple of weeks we have seen. Then there was, it went down, but the last 2 consecutive days have shown that it has bounced back. Your understanding regarding the performance overall about the Pakistan Stock Exchange, and as what has been mentioned in this particular report by the Finance Ministry, that it shows the sustained rise, shows about the overall health of the economy, and that is improved.
Well, thank you so much, Jawad. Building on Dr. Waqar's point, that obviously stock market, it shows that there is now confidence of investors bouncing back. So it's a positive indicator. But obviously this railing of stock market is not a real economic sense. We need to have this real economic indicators showing the progress, which are showing the progress. I would say that building on Dr. Waqar's point, I would say there are 3 C's through which we can understand the positive signs of Pakistan's economy. First is the credibility, that is economic credibility, that caretaker government has taken certain measures, and they have, I would say, preferred rule over discretion, and they took those pure textbook economic measures through which the economy has now more confidence. That is the second C, credibility, confidence. And third C is the coordination, that is between federation and provincial governments, and the regional coordination, which have resulted these positive signs in all the sectors. I would say that the positive signs, the growth rate in agriculture sector, that would be translated into the other sectors, retail sector, that would be showing much more progress in the coming months, and that would be translating in the other sector as well. So I would say that credibility, confidence and coordination, these 3 are the key pillars of Pakistan's economy, and the next government, they should continue these sort of credible measures, and with confidence of the market and confidence of the investors, keeping that in line with the coordination of our friendly countries, regional countries, and within Pakistan. That would be the way forward for Pakistan, so that we can persist these performance of these macroeconomic indicators as well as the stock market, so that we can have this long-term sustainable economic growth and trickling down of benefits of these economic indicators and economic growth, so that the masses can be benefited.
Right. Now, you already mentioned that also Dr. Vaqar Ahmed has mentioned that when we talk about specifically about the performance of the Pakistan Stock Exchange, it doesn't happen to be the prime indicator of the overall health of economy. What about the exports, which have also increased 5%? They've increased in the first 5 months of the current fiscal year. When we talk about imports, overall they've reduced 16%. The current account deficit has gone considerably less, 64.5%. Foreign direct investment has gone up 8.1%. Now, FBR revenue has gone up 29.6%. As already mentioned in the introduction, that there was 66 billion rupees exceeded by the target that had been set by APR. What about those? Specifically talking about the exports starting from there.
I would say that if we plot the graph of Pakistan's exchange rate, you will see that the exchange rate started to come down in the month of July after the signing of IMF programs, which means that IMF program that brought back the confidence of the investors, and that translated into all kind of positive trends and positive indicators coming into our economy. You name it. If you see the graph of quarterly growth rates, agriculture posted positive growth, the manufacturing posted positive growth, the services sector posted positive growth. So these are the indicators that credibility and confidence coming into our economy, it is bringing all kind of positive indicators to macroeconomic indicators of Pakistan. But to continue this trend, I think the next government, coming government, they should make these strong and hard decisions so that these credibility or credible measures, they are continued, but at the same time the trickling down the benefits of these economic growth and persistent policies, that should be
I'll be
key for
taking your
Pakistan.
detailed view regarding this particular thing as to what measures you expect the new incoming government might have to take in order to take this particular stabilization towards a more sustainable level. For now, we are honored to have been joined by another participant, Dr. Khaqan Najeeb on Skype, former advisor at the Ministry of Finance. Dr. Najeeb, thank you very much for your time, for being with us on Views on News tonight. Really appreciate that. Now, as the year 2023 is ending, we are headed into a new year, 2024. The indicators, the economic indicators in the first 5 months of the ongoing fiscal year suggest by and large that the economy of the country is back on the right track after the tough measures by the authorities here in Pakistan. How do you think the last 5 months, in particular the 5 months of the current fiscal year, had been overall?
Jawad, very clearly, once the IMF program happened, the reform process, the price adjustments, and other adjustments under the program have helped stabilize Pakistan's economy. You can see the initial signs of the macroeconomic stability that have emerged in terms of some controls on the fiscal. Your current account has come down. Your inflation, still high, is hopefully plateauing out. And the buildup of reserves, which went to about $8.7 billion, has receded a bit, but has receded very slowly. And hopefully in the next few months, once we get the IMF tranche and other monies, we would again have a pickup there. I think this was aided by 4 very important measures by the establishment. One, the administrative measures and the regulatory measures that were taken on smuggling. Number 2, hoarding. And number 3, what you did with the process of de-dollarization in the country by curbing an illicit, illegal market that was working. And lastly, what you also saw is that we went ahead and we challenged, after a long, long time, the Afghan transit trade, the kind of goods that were going there, the kind of, $6.7 billion of trade that was happening. And in goods like synthetic fiber, tire tubes, teas, which were all then being sold in the informal market of Pakistan without paying any due taxation, and was hurting the country. I think signal to the economic agents that the administration was serious to do all this, kind of created a goodwill factor along with the IMF program. And of course, some indication that we want to get investments in the country and are trying to take a whole of government approach through the SIFC. So these 3, measures, the fund, the administrative measures, and lastly the SIFC initiatives as a whole of government approach, kind of, excited the economic agents in the country. You saw a better stock market. You saw Pakistan's bond being traded better. And generally, there was some hope that we are out of the woods, so as to say, meaning that
Right.
default has been avoided, and we are in a more, we are marching towards macroeconomic stability. And,
Right.
the gyration in the rupee went away. So that was, in itself a signal that there is some comfort level there as well. All in all, I think that's where we stand right now.
Right, Dr. Najeeb, when we talk about the performance of the Pakistan Stock Exchange, now this particular report by the Finance Ministry says that in November 2023, the Pakistan Stock Exchange showcased outstanding performance. The sustained rise in the PSX index over the past 5 months indicates an improvement in the overall health of the country's economy. Earlier, during the course of our discussion with other panelists, Dr. Waleed and Dr. Ahmed, they are of the view that it doesn't happen to be the primary instrument of judging the overall health of economy of the country. What's your understanding of that? What does that particular continuous sustained rise in PSX during the first 5 months of the current fiscal year actually depict?
So one, Pakistan market, Jawad, was trading at a level where the market participants thought that the market was, taking in itself a default scenario of Pakistan. In May, June, we had reserves of $2.9 billion. We were looking ahead of the need for $25 to $28 billion. The IMF program had been derailed. Price to earnings had fallen to 2.5 to 3. Our price to earnings average has been around 6 for the past 5 to 10 years. The market was extremely cheap. So any macro stability kind of indicated to the participants that this was a good time to buy shares. Secondly, the profitability of the companies came out well. Now, let me explain that also, because a lot of people would, find it hard that in a slowing economy where there is an induced slowdown by keeping interest rates high, why is the profitability of companies coming so good? The reason is that general inflation and the price hikes in the country translated into much higher profits in many sectors of the economy, as well as the banks did well because higher interest rates, their NIM, their net margins, interest margins were good, so they did well. So the market was extremely cheap. Thirdly, property had lost its luster. Gold was no more of a glitter. We were doing de-dollarization. So a lot of parked funds had to go in here. But having said that, the original question that is market a representative or not? Now, this must be tackled with a lot of care. Pakistan is a small market. Pakistan's investors are 300 to 350,000 only. So yes, it's a small market, small number of people, but I consider them to be more sophisticated. So I take this as an indicator that the sophisticated investor, both locally and you must remember, a very small paltry amount from the outside also flow into Pakistan. Despite the fact that Pakistan's credit rating is near junk and has not been reviewed by the two rating agencies. Number two, our market's free float is very small. So understandably, it's easier to reprice the market because with a little bit of investment and euphoria, the market can get repriced. But having said all that, the market participants putting in money, the market rising, our MTS, the borrowed share market went up to about 40 billion. And that's why you saw the two-day crash in the market where market came down because there was selling there. Also, the market participants tend to think, and the markets, I trade global markets, so all the global markets are performing very well. November, December has been a defining time for global markets. The markets are up to the in double digits. It's not that the US economy has picked up. There is a hope that interest rates would come down. There is the same hope in Pakistan. There is hope that in the coming years, a new IMF program, stability will continue, and we can transition into a growth mode in the next few years. Markets are always forward-looking. So it's, this kind of scenario. But one should accept it's a small, thin market, and that's why it's easier to move. But still, the 350,000 participants do feel that it's a good place to invest. They did. Good luck to them. They made money. That's the way it should be.
Right, Dr. Najeeb, when we talk specifically of exports, now they've increased 5% overall in the first 5 months of the current fiscal year. As far as imports are concerned, they've gone down 16%. Now, by looking at this particular report for the month of December by the Finance Ministry, the exports of course, have grown up. Now, the imports for this particular month of November have also increased. What do you understand by looking at these numbers? The increase in exports and a reduction overall when it comes to imports.
Jawad, one thing is very clear. Pakistan's export to GDP is an untenable level. That's like, if you think long term. What do I mean by that? Pakistan's export to GDP is 10%. India's export to GDP is 22. Malaysia's is 38%. So we are, this is an area which is the defining, instrument that Pakistan needs to change over the next 5 years. But having said that, there is a global slowdown. There is a global embarking of higher interest rates. US interest rates used to be zero, 12, 14 months ago. It's risen by 5.25% because they want to tame inflation. It's expensive for the stockists to stock Pakistani goods. Just being very simple. So there's a global slowdown that has affected partly our exports. We put in $2.5 billion of turf machinery in the country. We've been not able to utilize that. Last year, we came in on 5 million bales of cotton because of the floods. This year is looking better. I think even if we sustain the kind of level we are sustaining, it's all right. Having said that, any incoming government or the next 5 years must be defining how we can move away from only textile, how we can move into value added, how we can, bring this to a competitive game rather than by a game which is funded by state largesse, state cheaper monies, and state funded subsidies. That is the future of Pakistan. In the short run, we may have done a few things, and that may have stabilized and ensured that we haven't had the kind of fall that we may have had. But in the long run, we are far, far away from what we need to do. Also, Pakistan's service sector exports, which is IT, ITES, and other, has a large potential. Over the next 5 years, we should try and realize this potential as well. This is real hard work, Jawad. And can we do the hard work? Remains to be an open question. We have not been able to do it over the last decade or so, or even more than decade. If I look at my export to GDP, it used to be 12, went down to 8, it's back to 10 and a half. This is a very uncomforting situation. You keep getting into a balance of payments crisis or a current account crisis because your export to GDP is so low. We are not far away from countries on our import to GDP. It's higher, but that's because a lot of our energy is imported. But it's actually the export to GDP which is really hurting. If we didn't have the remittance cover, it would have hurt more.
Dr. Najeeb, as you already mentioned your take regarding the SIFC, and you already have also mentioned there is a lot of hard work required to be done in future for a sustainability. Now, I'll come back to you to take your understanding. Is that stage already set with these tough measures and the gigantic projects such as SIFC and the Green Pakistan Initiative and the revitalization of CPAC for that particular hard work to be done in future, perhaps? Let me once again proceed to Dr. Waleed. Now, foreign direct investment. Now, there has been an increase of 8.1%. What is the potential regarding that? Up to what level that particular investment could be increased, especially vis-a-vis when you talk about the SIFC?
Well, I would say that potential is very high in Pakistan because Pakistan can provide what our neighbors, our neighboring regions demands, particularly in terms of Middle Eastern countries. They are sort of food insecure countries. They need to have abundance of food. Pakistan can provide in terms of land, in terms of environment, in terms of production of food. So they can invest in Pakistan, and I would say that bringing the coordination back in the fold, Pakistan can coordinate, and Pakistani government is coordinating very efficiently in terms of GCC country coordination, and they are signing the agreements so that they bring their investment into Pakistan, and Pakistan can use its labor force, its environment, its land to produce what they want. So in that term, FDI can lead to this diversification of exports, diversification of investments, and other sort of diversification, which is very needed for Pakistan in this scenario. Because I would say that Pakistan's three biggest problems, that is economy, energy, and environment, that can be solved with this diversification in energy sector, Pakistan can reap the benefits in terms of FDIs coming from Middle Eastern countries that would solve Pakistan's energy crisis. In terms of economy, Pakistan can harness that FDI and make Pakistan's exports grow larger and larger, and that would solve the problem mentioned by Dr. Najeeb, that is exports to GDP ratio that would increase. And lastly, in terms of environment, last year's COP, this year's COP also called for the partnerships, so we can build that kind of partnerships.
Right.
Well.
When you specifically talk about the Gulf countries, now when we talk about the numbers, the exports to KSA and UAE and Kuwait have increased considerably, with a growth of 28.98% to $1.257 billion in the first 5 months of the current fiscal year, against $974.5 $1 million from a year ago. So, don't you think it's a considerable rise? And that shows us there is a huge prospect when more and more foreign direct investment is going to come over here, and ultimately it is going to enhance the exports more towards these countries.
Yep, this is a considerable amount of investments and exports coming into Pakistan. I would say that connecting the region is the key for Pakistan. Pakistan can be this bridge between Central Asian republics and Middle Eastern countries, between China and Middle Eastern countries through China-Pakistan economic corridor. This will bring two major players in terms of regions together, and Pakistan can reap the benefits out of these two regions in terms of providing them with corporate farming and other mining or other exports and investment opportunities, and connecting them with the Central Asian republics. That would be a very key.
So do you think the stage is already set with all these tough measures of the gigantic projects such as SIFC, as well as the Green Pakistan Initiative, as well as you mentioned China, the revitalization of CPAC is also pretty much there. So as Dr. Khaqan Najeeb earlier mentioned, there is a lot of hard work for sustainability to be witnessed in the future. Do you think with these measures the stage is already set and it could be capitalized from here onwards?
Yes, the stage is already set. There is credibility, there is confidence, and there is coordination. But the key would be the persistence of these policies. If the economic policies, political policies, stability that persist into the economy, this will ensure the confidence of the investors, not only the local investors, but the foreign investors as well. So I would say that SIFC performing as a regulatory role, a single window role, incentivizing the investors, opening door for them, is a very welcoming step, and that should persist not only to bring foreign investors, but opening doors for the local and private sector investors in Pakistan as well, so that there is more and more not only the foreign investors but the local investors coming into the Pakistan. Combining it with the other macroeconomic indicators, if policy rate drops, that would also help the local investor as well as the foreign investors.
Right. Let me take Dr. Najeeb's view on this particular thing. Dr. Najeeb, the same question already asked you. Do you think the stage is already set regarding, I think we've lost the connection with Dr. Khaqan Najeeb. We'll try to reconnect with him. As soon as we reconnect with him, we'll ask him this particular question. Is the stage set already with these tough measures of the government in order to have more sustainability when the overall outlook of economy is back on the right track? Now, Dr. Waleed, when we talk about taxes, right, there has been a considerable increase when we talk about FBR in the first, from July to October, there was 66 billion rupees, more of amount that was collected beyond the target that was set by FBR. Of course, it's a performance that speaks volumes. There is a concerted effort in that particular direction. What else is more required in order to increase the revenue from taxes?
Well, I would say that this is the effect of Pakistan's macroeconomic stability, that there is more, I would say, economic growth and more growth in the tax revenue as well. But I would say that in economic literature, there is a curve known as Laffer curve, which is a I would say inverted U-shaped relationship between tax base and tax revenues, or tax rate and tax revenues, which shows that when tax rates increases, tax revenue also increases, but at the point they start to decline. What Pakistan needs to do is Pakistan needs to carefully plan its tax rate so that it is not overburdening the already tax-paying community. Pakistan need to broaden its tax base so that more and more tax filers are coming into the net. For that, Pakistan needs to document its economy because significant portion of the Pakistan's economy is still undocumented economy. It's informal economy. So we need to make it the document and digitalization of the economy so that more and more sectors, more and more players, more and more economic agents, they come into the fold of TaxNet.
So what are those, quickly, unfortunately, we're short of time, what are those sectors which remain to be in the undocumented side of it?
Well, I would say the retail sector, the agriculture sector, agriculture as an industry, and these are some of the sectors which should be broadened into these TaxNet and tax base.
Your quick last comment as to where do you see the economy heading in year 2024?
Well, I would say bringing again the 3 C's, credibility, coordination, and the coordination back into the fold. Pakistan need the persistent and consistent policies in terms of political policies, in terms of economic policies, and in terms of energy and environmental policies. Pakistan in the right direction.
Dr. Khalid, Waleed, Economist, thank you very much for joining us in the studio tonight. Really appreciate that. With that, we come to the end of today's show. Till the next one, take good care of yourselves.